All right, folks, welcome back. So we're looking at the hourly chart on the dollar index. Why are we here? Why are we looking at this? Well, I'm looking at this because I want to show you the relationships between a risk on and risk off market. All right, so one of the questions I got, the idea of using the dollar index, is it useful like when I look at the Forex market, like if the dollar's going higher, obviously that's going to put pressure on the foreign currencies and it'll be less likely for them to have sustained rallies. They're more likely to have sustained declines. So dollar up, foreign currency down. Dollar down, foreign currency up. The reason why that's occurring is it's a risk on, risk off scenario. Dollar, if it is going up as we have here, this is a risk off scenario. Okay, risk off scenario implies that generally every other market or asset class will start to decline. And this is treated as like a flight to quality, okay, or a safe haven. So money pours into the dollar and it pours out of risk assets. That would be like foreign currency. That's why I've been telling you to look at the euro dollar to go lower and make a new low on this daily chart. And today it did it. And then also this applies as well to the stock market and index market. I want to show you this chart here and remind you of what I mentioned in the previous week in our meetings together in the episodes. I said that we would likely see the dollar index drop down. If I was making the market for the dollar, I would see it go down to around 99.92. Then I said I would run the relative equal highs and start to run it higher. I gave you the objectives of relative equal highs. I want you to look at the relationship between this price move here. Let's take a look at what the relationship looks like with the dollar versus the E-mini S&P. So this is the June contract for 2022 of the E-mini S&P futures market. As this dollar was going higher, what was going on in the E-mini S&P? See that inverted relationship there? Why did I feel confident to publicly say that 99.92 level? Well, I explained that. Why did I think it was going to rally from there? Because I'm bullish on dollar. Why did I hint that we're going to be going lower into the E-mini S&P relative equal lows and as we enter into May? That's a seasonal tendency. So all those factors came together. All right, so here's that daily chart, and here's that bearish order block I was referring to. And the high I said is the level we don't look for it to be traded to. And you can see we didn't even get to it there. Okay, so we were out up into the order block, and then we had the weakness that was expected as we go into that May month, and we're reaching into these relative equal lows. That's the next draw on liquidity. But for now, again, just keep your study inside this order block. That's taught in this YouTube channel. Okay, that's the order block. That's the one that makes the likelihood of the market turning it in this area and then going lower and attacking the sell side below here, below the relative equal lows here is next, and then this low here. So ultimately, we're looking for a run below here for the sell side. Now, it might want to go down below here and give a little bit of a retracement if it leaves this portion open. That might want to rally from going over here up to there. I don't think it would do that personally, but it could happen. But it's likely to draw into that old low here. Now, how we trade once we get there, that'll be interesting because I don't know if it's going to accelerate violently to the downside or if we're going to have a sharp retracement higher. I don't know that. Okay, I don't care to know that. Right now, I'm just looking for and submitting to the idea that we're going to keep drawing down on the daily chart. Each daily candle should be expanding lower and reaching into this area. Okay, that's what I'm expecting. That's my ideal scenario. Now, if you look at the daily range here today, we had a little bit of movement above the previous day. So we rallied above Monday's high and then failed and accelerated to the downside. Fell short of just running below these relative equal lows, but I still believe that's where we're likely to go. And here's the midnight hour, New York time, and the opening price there. Notice we only had 2 little moves above that, and that's a really anemic movement for what I was expecting, a little bit more pronounced. So if you have a small little movement like this, it can throw you off if you're expecting, like I was. I wanted to see a little bit higher rally. So in the morning, I was looking for maybe a little poke above here. Didn't happen. We broke down, retraced back in, bearish order block, and the imbalance, and spent a little bit of time here, and then rolled over right before the 9:30 opening. But ultimately, we moved into the lunch hour, had a little bit of retracement here, broke down once more, and then aggressive selling, really aggressive selling into the PM session, into the close of the day. If you look at the opening price at midnight local time, New York midnight local time, this price is useful for trading the London session. That's 2 o'clock and 5 o'clock in the morning, New York local time. And it helps me frame the power 3 for the daily range. If I'm bearish, I'm looking for something to rally above that opening price in London. That's my ideal scenario. I'm looking for that personally. As you can see, we really didn't get much of that today. It was extremely heavy and just wilted and went lower. Sometimes that's going to happen, folks. And in this instance, I missed a setup. I don't get in what I'm thinking I'm expecting to see. The beginning of the day, this is where I look for the daily range power 3 setup, and or the ideal scenario. If I'm bearish, I want to see something rally above that opening price. If I'm bullish, I want to see it decline below that opening price. Okay. At 8:30, the same thing. I look for those types of scenarios. I'm looking for weaker prices. I'm looking for it to trade lower. And does it rally above the 8:30 opening price? It never does. It's too heavy. It just wilts. Okay, it keeps going lower. Now, the opening price at 8:30, I use that for, again, power 3 for the New York session. The same thought process I'm using for the opening price at midnight in New York time. That opening price, if I'm bearish, I want to see a move above that. That's what I dub a Judas swing, a false rally, or a suspect rally. This is really important that you understand this part of it. You know that I've been bearish. I've made it public knowledge here. Did we rally above the opening price at midnight? No. Did we rally above the opening price at 8:30? No. And we're bearish. What does that indicate to you? Obviously, with the benefit of hindsight, it's extremely bearish. It can't even rally to a short-term premium above the opening price at key levels and time. So we have an extremely heavy bearish market. So it's not going to give us these stunning little short-term rallies that we can fade. It's just going to stay heavy, and either you get in where you can find small little pockets of imbalance, or you miss the move entirely. All right, so here's the London Open setup. This was the move that set up the only real sound entry, in my opinion, that took place today here. This displacement, fair value gap, rallies up, bearish order block, fair value gap, runs into it, and then you hold it because of the microstructure shift below the short-term low, the imbalance, we run back up in. This imbalance here, remember what I taught you about this? This one here can be traded to on a spike. It can get up in there, but your entry is on the lower fair value gap. Do you see the logic working here? You are going to use a stop that's going to allow for the market trading up into this one. So anyway, let's talk a little bit about the 8:30 time period and 9:30. All right, so here's 8:30. I've got the imbalance here after 8:30. Now, normally with the model, I'm teaching you to look for something to the left prior to 8:30. Some kind of short-term high. We want to see it rally up. And using the opening price at 8:30, which is here, we want to see it rally above that, run some stops, and then break down and create this type of scenario where it has displacement and a imbalance. It rallies back up into the imbalance and sells off. The model doesn't exist in today's price action on the 5-minute chart. The model, I want to see it run above the opening price at 8:30. The opening price at 8:30 is the New York sessions opening price. Now, don't get confused with the New York midnight candles opening price, because the New York Association in the name, New York session is the 8:30 to 11 time period, New York local time. So I'm looking for this framework to offer power 3, which is a fractal element of accumulation, manipulation, and distribution. We'll start getting a little bit more detail here. Here you have the 4-minute chart, the imbalance here. This is one, again, that is not rallying above the opening price at 8:30. Now it's showing 8:28, but that's because I'm showing a 4-minute chart. So don't let that confuse you. But the opening price, again, never got traded above at the 8:30 candle. So whatever that opening price is at 8:30, you extend that out in time, and you want to see that rally above. Now, when you have this expectation, the other aspect of time is the 9:30 opening. That's when the equity market or stocks themselves start trading their New York session. So what happens at 9:30? What am I expecting at 9:30? Well, number one, 9:30 is just when the opening occurs, and there's initial volatility. Now, it could be whipsaw, where it can go up and down real short term and go both directions in a small range. Sometimes it could be a really large range, and clear both sides of the buy and sell. And then whatever the real move is going to be for the day, we wait for that to unfold. Today, we can see at 9:30, it just starts to run lower. It doesn't give us a rally at all. So it just starts to speed up what's already in motion from 3 o'clock in the morning during the London Open session. So at 9:30, all it does is start to accelerate down.